Hey everyone, Ryan here, and we are back down another month in 2025. And we're going to go ahead and roll through our monthly market update for the 7 cities out here in Hampton Roads, Virginia. So we're going to talk about our local monthly stats, of course, like we always talk about what's happening in the 7 cities. We're also going to talk about rates. We always want to touch base on those and see what's happening with rates. That's always super important to stay up to date with those. And then today, we are also going to talk about affordability. So last month, we talked about how Virginia Beach and the surrounding areas are doing against Virginia as a state. And this time, we're going to highlight how the affordability situation is nationally, and then how that relates to where we are in Hampton Roads as well. So it's going to be a little interesting dive into that. So let's go ahead and get started. I'm going to release this on Memorial Day. So I hope you guys had a great Memorial Day weekend and a great Memorial Day. Okay, let's go ahead and get into it here. We always start with price. So where are we with our median sales price in the 7 cities? We are up 3% month over month, and we are up 3% year over year. So even across the board, so from March to April, we went up 3%. We are sitting at basically $345,000 for your median sales price in the 7 cities. And so let's talk a little bit about what we can expect over the next few months. You might be wondering if that price is going to continue to increase. And the answer to that is probably yes. As you can see in this chart here, we always start at the lowest point around January of each year, and then we enter this sloping up period, usually in the first quarter of the year, heading into the second quarter. And that's where we are right now, in the middle of these upward sloping lines. That is the price increases happening over the summer, which is very typical. As you can see, it happens every year. We usually peak out around July, and then it starts curving back down after the July month. So at the end of the chart, that's where we are. We are, as you can see, right there in the middle of the upward sloping line for this year. So you can expect the prices to continue to increase, barring some crazy event that changes this trend that is very consistent year over year. All right, so settled sales, we saw over 1,800 settled sales for the month of April. That was a big jump from the previous month, so almost 18% of a jump in settled sales. And then we are seeing a downward slope of days on market. So the velocity of the market is increasing, which is very typical for this time of year. So median days on market, 14, and trending down. All right, new listings. We saw a pretty good bump of new listings from March to April. April had over 2,600 new listings hit the market, and our active inventory was over 3,600. And that's a big increase from this time last year. So we have a lot more homes on market than we have had over the past year, which is good news. But let's go ahead and turn our attention to mortgage rates. That's where some of the not so good news is. I'm sure a lot of you are aware that rates are much higher than they have been over the past year or so. And we saw it peak out around 7%. So all this data is coming from Mortgage News Daily, and it's very recent. I just pulled this earlier today off of their website. So this is where we're sitting at a 30-year loan at 7%. And these are national averages, so don't freak out. You might be able to get a better rate than this. Talk to your loan officer, or if you need to talk to your loan officer, I can direct you to a great one to talk about your personal situation. But we're just talking in generalities here. Your 30-year VA and FHA products are doing better. They're about a 0.5% lower than a 30-year conventional, and your jumbo loan is sitting at over 7% as well. And increases across the board. These are all higher than they were last month, so trending upward at this moment. So that's not good news, because it is affecting the main topic of today's market update, which is affordability. So this headline grabbed my attention and is one of the reasons why I decided to talk about this market update, because affordability obviously has been an issue for a little while now, and it's on the forefront of a lot of people's minds just in life in general. But when it comes to real estate, it is becoming a bigger and bigger issue. So this headline says affordability gap persists. Households earning $75,000 annually can afford less than a quarter of for sale home listings right now. So that immediately seems concerning because $75,000 for a household isn't, right? I mean, that's not like, it's not what we think of as like a low household income, more of like a middle class household income, or at least used to be, right? So we dive a little bit deeper into the article, and it goes into a little bit more details of what that really means. And so only 21% of the listings available as of March 2025 are accessible to households earning $75,000 a year. Now, that is a big drop from the pre-pandemic levels, where that household income could afford almost 50% of the listings that were out there in a balanced housing market. That is what you would want to see. A good middle class income can afford about half of the homes out there. But I highlighted the bottom part here, which is what I thought was particularly interesting. I'll just read it. These home buyers would need access to 48.1% of listings. To reach that threshold, the market needs 416,000 more listings priced at or below $255,000. So if you saw my market update last month, then you know that that price point, $250,000, is a declining price point in Virginia. We're seeing less and less homes at that price point, more and more homes at above the $400,000 mark. So that's concerning, because if you are in that price range, you are able to afford less and less homes. And they're talking about national levels, of course, but even when we turn our attention to Virginia, we know that this is a declining price point. And we know that, as I just said in the beginning of this presentation, our median sales price in the 7 cities is $345,000. Okay. So, and not to mention that 416,000 homes, even if you could get those price points again, that's still a lot of homes that are missing right at that price point. So there's a lot of concerns for people in this income bracket, but you can go down farther into the article and it gets even a little bit more concerning, because if you're a household that earns $100,000 annually, you are in a similar situation. And so you can think $25,000 more, that's pretty significant, but your situation hasn't improved all that much. You can currently only afford 37% of homes listed, which is up slightly from last year, but is far below the pre-pandemic levels in 2019 of almost 65% of homes they could afford if you were a household earning around $100,000. And so right now we are well below what they consider the target for a balanced market of 60%. And so they are facing a shortage of homes that are priced under $340,000 nationally. And as we just said, our median sales price is $345,000 in this market. So with all that being said, affordability is a big concern for people out there, and it's getting more concerning, I would say. So to wrap it up, I don't want to be all doom and gloom, but that's just the reality. And I never want to sugarcoat it or gloss it over for you guys, or just, hide things. I always want to be transparent. So to summarize this presentation, I would say that affordability is a big concern for now. And in my mind, it's a concern for the foreseeable future. So if you're wondering, should I buy now? Should I wait to see if things improve? This is the question that everybody is asking themselves. There's a big question that I think that you should ask yourself, and that is, what is more likely? Is my situation going to improve, as in my income is going to increase? Either your personal income is going to increase, or maybe wages are going to increase over the short term. and catch up with the rising cost of everything. Is that a likely scenario that you think is going to happen? Or scenario two, do you think that there's going to be a big price correction in the market, whether it's the housing market or just with prices in general? Do you think that something is going to change drastically to bring down the cost of things so that it comes back down to the current wage level being more affordable? So if you think that scenario two is more likely, then you are probably in the wait and see camp, and you're going to wait 12, 24 months or whatever it is that you have in your mind that you think that we're going to see some sort of price correction. If you don't think scenario one is likely for you and that you won't see the income level rise to match the rising cost of things, then you are probably going to try to buy something sooner, because you don't know if your situation is going to get worse in the future. It very well could get worse if things continue to rise in expense, and you don't think that you personally are going to make more money soon, or you don't think that wages are going to increase and stop lagging behind the cost of things in this country. So if you think that scenario one is not likely, then you're going to want to get aggressive with your saving. You're going to want to get aggressive with your financial situation and try to buy something that works for you soon to secure that home ownership piece that is so important for people to secure their future. I know for me, owning my home that we bought 10 years ago is a huge cornerstone to my financial stability. And I'm really glad that I did it 10 years ago, but we can't go back in time and get that for you. All we can do is try to secure your situation now. So point number three is to plan accordingly and to plan with purpose. Whichever camp that you're in, you're going to want to have a plan, and you're going to want to act accordingly, and you're going to want to have steps to reach that goal. If you're in the buy soon camp, then you're going to want to partner with an agent, link up with a loan officer, and start figuring out what it is that you can buy. How can you improve your situation to maximize your buying power and secure your situation now? If you're waiting and you're waiting to either increase your buying power, or you think that something is going to correct itself in the market, then you still want to have a plan. You're still going to want to save money. You're still going to want to increase your credit score and all those things that you would like to do even if you are buying soon. But you're going to want to stay plugged into bigger trends, market conditions, and the news in general, just because you're trying to wait around for that big drop, and so you're going to want to be ready when it does. So both viewpoints are valid. I don't know what's going to happen in the short term or the long term, but I do pay attention to these things as my job. So if you have any questions, or you're wondering if what scenario is really best for you, then feel free to reach out to me, ask any questions, and just know that I'm here to help you and to guide you as best I can when it comes to the real estate market. That's it for now. I'm sorry it wasn't as good news as maybe some of the market updates have been in the past, but it is what it is, guys. Until next time, I'll see you out there.